Look up in the sky, it's a bird, it's a plane. No! It's Tim Anderson, strange visitor from another planet who came to Earth with powers and ability far beyond those of mortal men. How you doing, Timmy?
I'm doing great.
Good. We are absolutely, I don't know if we're in a state of complete irrational enthusiasm, or we've been abducted by aliens, or we're living in the vortex or something, but we are coming into the end of October. I don't know how we got here. I'm still like, I'm in July 2024. I mean, it's been good. The market is rallying so quickly that we're hitting thresholds of 1,000 points on the Dow so quickly I don't even have time to print hats any longer. I'm the guy who's been giving away Dow hats every 1,000 points.
Just print the 50,000 hats. Get the 50,000 hats ready.
They're being printed. I'm telling you, I've been printing hats since Dow 6,000, and I missed 45,000, 46,000, 47,000. Anyway, so look, ladies and gentlemen, we are in the midst of October. We are in, let's just a quick recap of where we are. So I'm going to go back to the last Fed meeting we had, okay? Because we're about to embark on a new Fed meeting, which is going to happen next week. Right. So last Fed meeting, August Fed meeting, 2 Fed meetings ago, right? Federal Reserve did not give us any inkling about what they were going to do. Last year, we cut interest rates 1 whole basis point. We did nothing until September. We had a shock and awe moment with a 50 basis point cut in September, and then 225s. Market handled it. A little bit of shock and awe a year ago. A little bit of shock and awe in that 50 basis point because people felt, we know why the Fed did it, because they had missed an opportunity in July, but it could have caught everyone off guard because when you do that kind of thing, everyone's going, wait, maybe it's worse than we think. 2025, we've not done any cuts, even though we kept promising them. We've been through all hell loose. We know that. February, March, and April, the self-inflicted sell-off that we had, we've bounced back. We've been everything that could be thrown at a market in history has been thrown at this market in 2025. And we are sitting here having like a couple of global wars, a new administration, interest rates, tariffs, God knows what, and a government shutdown. And we are still
and more tariff talk this morning, overnight, with Canada, basically shutting off all talks with Canada.
It's absolutely
and the market's up 500
points.
The
market is up 500 points. Can you friggin' explain it to me, please? I'm not putting you on the spot.
I will just say that there are more buyers than sellers.
Yes, good.
All the economic data seems to be very positive, and the CPI number, which came out this morning at 8:30, which you forgot to mention, but that's okay because there's a lot of things going on.
I was going to let you talk about it.
So the CPI number, annual year over year, came in at 3.0.
Okay.
Now, people were talking maybe 3.1, but then there were some whispers that, this one could be a little higher. So there's a little bit of angst in some quarters about this number. We come in at 3.0.
So let's explain to everybody. Consumer price index is the price. It's inflation. It's the price that it is the cost to the consumer, probably as a function of the increase in everything because of tariffs.
Right. Now we know that gas prices are down quite a bit. That's something
they're down
that
because the price of oil is going down. But what is going up though?
Well, now housing is still a little elevated, but that's been a very deceptive stream of data because a lot of people have these mortgages in the high 3% or 4% handle on them, range, 4% range. A handle is the first number. So, and they would normally buy a house. A lot of people are ready to trade up. Get another house. Their family's a little bit bigger, but they don't want to go from a 4% mortgage to a 6.5%, 7% mortgage.
That would make no sense.
Because then even if they get, it's probably going to be a little bit of a bigger house if they're trading up, and B, the rate's going to be higher. That means their monthly payment's going to be a lot higher. Okay. So the housing market has been frozen, and where you will hear a lot of economists and a lot of very smart economists on TV talking about how, the economy is really fine and the GDP numbers have been strong and the consumer is doing well and productivity is going to be going up. And that part of the economy and the world doesn't really need lower interest rates. The housing market is frozen. And it's a Think about buying a house. If anyone's ever bought a house or built a house, all of the little tentacles that come out from that house.
You tell the story better than
the
anybody.
painters, the people that put up the
lumber,
drywall,
the plumbers.
the plumbers,
Right.
the electricians,
The roofers.
the landscaping
Right.
people, the people
Everything.
that put
Yep.
the
These are all employees and people working.
and then the local delis that.
Yeah.
Whose business goes up because all the workers are buying food,
Correct.
more
Yep.
food from.
Yep.
All of that has a huge collateral
Yep.
impact
Yes,
on
yes,
local
yes.
economies, and it's frozen.
Yes.
So that part of our world or the economy really does need lower interest
you
rates.
pri-
The concern is that it would spike inflation on the consumer sector. So you get a number today like 3.0, much less than what people had feared, and maybe a tick below
But
consensus.
didn't the number come in at the highest inflation number we've had for a while? That's what some people read it.
Okay, so look, one of the reasons this number came out, even though the government was shut.
Right. Well, let's explain
I'll
that.
explain
okay,
how that.
we've been shut for 4 weeks.
Okay.
The fear was a couple things. Besson said if we're closed for more than 3 weeks, it's going to impact the GDP by as much as a 1%. That
That's
did
possible.
not scare.
Right.
I know, but it did not scare anybody. We
Nope.
thought
Because
that
there'd be a
was
one-off thing and be made up the next quarter.
Exactly. And
Right.
think about it. In the world we live in 2025 with AI and all that stuff, you're telling me that irrespective of the government being shut down, why can't we come up with numbers?
So we did
Why
not.
can't we come up with a number?
Because let's get back to these economic data numbers, which
Yes.
we did not get the employment numbers
For 4 weeks.
We did not get the employment numbers the first Friday of October because the government was shut down.
Correct.
But we did get the ADP numbers, and ADP is the payroll processor
Right.
that has a lot of
those
data
data, yes.
on jobs, and their data is more like hard data
Right.
because they process payrolls. So
It's
because of what
legit.
they
It's
do,
straight up. It's real.
they have real data where the
Right.
government job numbers come from
Surveys.
surveys.
So why
and
wouldn't
then
we
when
go
they
for hard
get,
data?
And then when they get their data coming in,
put
we
them
get
together.
revisions, and the
Right.
revisions have been much more extreme than they've ever been.
last one was
And that's-
880,000
and that's been
difference, right?
And that's been and the same thing the previous year, and
Yeah.
that's been the controversy over that part of the data. But
forever.
now, so the government shut down. Most of these numbers come from government agencies, Department
Now,
of
I understand.
Commerce,
I did
Bureau
not
of
know
Labor
that. Okay,
Statistics.
that makes
da, da,
sense.
da, da,
Gotcha.
da, da.
Okay.
Okay, now, we did get CPI numbers today. And the
Yeah.
reason we got CPI numbers today is because the government repositioned some employees to go over to the either the Bureau of Labor Statistics or the Commerce Department
Right.
and do whatever they had to do
Give us a number.
and call in some people that are familiar with the process to get the CPI number. The reason we needed the CPI number is because the Social Security Department needed that CPI number because it's a 12-month trailing average of October 24
Right.
through October 25
Right.
that the Social Security Department needs that CPI number so that they can calculate what the COLA, cost of living advance,
Right.
what the cost of living increase is going to be on everybody's Social Security checks for next year.
Wow.
And they
Okay.
so they need that data in the system. So within 30 minutes of the Commerce Department saying, okay, look, the CPI for October was 3.0, all of a sudden then 30 minutes later, the Social Security Department says, okay, the COLA increase for 2026
We immediately got an adjustment.
is going to be 2.8%, which you would think that you're supposed to adjust for the rate of inflation.
Right.
Meant decades ago when inflation went crazy in the 70s, they said, look, seniors are getting killed. We're going to start to increase your monthly Social Security payment by according to what inflation was for the prior year.
Right.
So and now they have the inflation number. So now they come out and they say, look, your Social Security check, if you used to be getting $3,500, you're going to get 2.8% more than that next year. But that's why this number came out and all these other numbers haven't come out, because the Social Security Department needed that. The Social Security Administration needed that number to put into their computer to show what the increase of everybody's Social Security check was going to be.
This morning, look, a deeply anticipated number, 4
Yep.
weeks in the running.
Yeah. And it was okay. It was not higher than
But
people
even
thought.
more necessary because we have a Fed meeting next week, and the Fed is going to cut rates or not next week.
It's almost a sure thing.
It's a 99%, but that was after the number that came out today.
Yeah, right.
So the number was in line. It did show a little softening of the economy. It did show a high inflation number, and it also showed an uptick in unemployment. None of these things are.
This number didn't show any of that. This was just your consumer price index.
So then whatever, but there were other numbers that came out this morning that showed all of that.
A little bit.
Okay. So we set the stage. That was when the market spiked up. 45 handles pre-market. The probability of an interest rate cut for next week went up to 99% on
from 95%
market or wherever the heck it goes.
Right.
And so it was a perfect example of, once again, bad news is good news for the market and for the interest rate cutting cycle.
Yeah.
All that being said, we are up 500 points. We are up 70 handles. We're inching
we
towards 7,000.
We got positive news on IBM, Advanced Micro Devices, and how much
Procter & Gamble,
additional juice they're going to get from quantum computing.
That's another thing. The president yesterday actually said he's going to start investing a large tranche of, I don't know if it's
there were conflicting
quantitative.
There were very conflicting reports on that, but you can see, given what they've been looking at, you can see where it would be very easy for people in the administration to legitimately say, look, quantum computing is AI, is supercomputing on steroids.
Right.
And it's very important for us to be the global leader.
Right.
And that's why these companies are emerging.
I can literally even.
But late in the day, the White House said we are not currently negotiating with any quantum computing companies about taking a governmental stake. And then the Commerce Department reiterated that. Now, there was this article in the Wall Street Journal earlier in the day that said people were talking about it. But look, people talk about a lot of different things.
Yeah, they do.
They could have been talking about it at lunch.
Right.
Maybe this is the next thing that the government will invest in.
Anyway,
but they are not currently in deep negotiation to do it.
I have to go to work in 1 minute and 45 seconds. We have to wrap this up.
And
ladies
all
and
those
gentlemen,
stocks are up.
You know what? We are here on a Friday near the end of October. We are going to have an interest rate cut, 99% of that next week. That is going to set the stage for whatever November and December look like. That is holiday season.
For your end of week and over the week headlines, everything's closing at all. The S&P 500 is closing at a weekly all-time high.
For the 36th time in 2025, we are closing out the week in record highs across the board. Ladies and gentlemen, this is irrational enthusiasm, irrational exuberance. We love it. We love it. We love it. Please, we got to go. That's all I got to say about that. To me, you're the best. I got to run. See you later.